Howdy, everybody. Welcome to Liberty Call for January 23rd, 2025. It is a Thursday. We're one day away from the weekend. My wife is going to be back from her 2-week trip to Africa and Paris. So be nice to see her after 2 weeks. So she was mad at me when I left or when she left. So, but she's not mad at me anymore. Anyways, all right. Well, hope everyone's having a fantastical day out there. It is better here in Colorado. It's cold. It is very, very cold. I think the high today was 20, but the sun is out. So, we'll take the victories where we can get them. So yesterday it was warmer, but the sun was out. So it actually felt colder when you were out and about. So anyways, all right. Well, the Fed is expected to hold interest rates steady as markets await clarity on Trump's policies. While stocks are showing mixed signals after a tech-driven rally. Netflix continues to soar, but Electronic Arts is struggling with weak demand. In the crypto world, Senator Cynthia Lummis is pushing for a U.S. Bitcoin reserve, and BlackRock CEO wants the SEC to greenlight tokenized assets. Meanwhile, HSBC is shutting down its fintech app Zing, and the FTSE 100 is flirting with record highs as investors monitor trade policy developments. Well, before we jump in and dive into the news, I need your help. I need some thumbs up, a like, a share, subscribe, a follow, and slam that notification bell. All righty. Well, let's hop into the markets. Where's my button? There it is. All right. Starting out with the Dow Jones, it was up 0.93% today, 408 points, closed at 44,565. S&P 500 up 0.53%, 32 points, closed at 6118. The NASDAQ was up 0.22%, 44 points, closed at 20,053. The VIX fell today, 0.86%. It's at 1497. Canada was up 0.48. Brazil was down 0.4, and Mexico up 0.22. Jump over to Europe. Germany was up 0.77%. The UK flat at 0. That's weird. I think it was flat yesterday too. France was up 0.7, and the Netherlands down 0.58. Spain down 0.08. Italy up 0.72. Switzerland up 0.39, and Portugal up 0.23. All righty, headed to a little further east. The Russian exchanges were both red today. The MOX down 1.65, RTSI down 2.46. Probably has to do with oil prices. And the overnights, the Nikkei in Japan was up 0.98. Australia down 0.61. New Zealand up 0.12. In China, the Shanghai was up 0.51. The Shenzhen component down 0.49. China A50 down 0.64. DJ Shanghai up. China A50 was up 0.64, and DJ Shanghai was up 0.27. Hang Seng flat at 0, and the Taiwan weighted up 0.97. All right, good stuff. I know. All righty, well, let's jump into the market recap. S&P 500 hovers near record high as Trump says he'll demand lower interest rates. Well, good for you, Trump. I mean, the man is smart. I think he has to know that I think he knows that lowering interest rates creates cheap money and, is a goose to the economy. I also think he's smart enough to know that, lowering interest rate, keeping interest rates at or near 0 for the better part of, all of Obama's term and most of his first term is what led to a lot of the inflation that, they just, poured gasoline on it with all the stimulus in 2020 and 2021. However, we had a big inflationary buildup through, from, 2009 all the way through, say 2018. So anyways, all righty. Well, let's dive in here. The S&P 500 remained near record highs on Thursday as of, did I already read this? Did I already read this? I think I might have. Focus. We'll just start from the beginning. All right. The S&P 500 remained near record highs on Thursday as investors evaluated corporate earnings and remarks from President Donald Trump at the World Economic Forum in Davos. In his speech, we didn't read this. Trump announced his intent to demand an immediate drop in interest rates, both domestically and globally, though the Federal Reserve's independence makes it unlikely to comply with such requests. The market remains focused on next week's Fed meeting, which they'll do nothing, where most analysts expect rates to remain unchanged. Meanwhile, Trump's comments on energy policy pressured oil prices after he pledged to request lower prices from Saudi Arabia and accelerate U.S. energy production. On the corporate front, on the corporate earnings front, GE Aerospace surged 7% after issuing a robust full-year profit forecast driven by strong demand for its parts and services as airlines continue to operate older jets uh, uh, due to ongoing new aircraft shortages. In contrast, American Airlines stock tumbled 8% after issuing a weaker than expected earnings forecast for the first quarter of 2025, projected to an adjusted loss per share of 20 cents to 40 cents, diverging from the positive outlook of its competitors. Electronic Arts experienced a significant 17% drop after cutting its net bookings guidance, citing underwhelming performance in its popular soccer titles. Analysts at Oppenheimer noted that the weak outlook for its global football franchise poses a greater concern than the delay of other game releases. Other earnings highlights include Knight Swift Transportation, which climbed 4% on improved operating margins, and Alaska Air, which gained 4% after reporting better than expected fourth quarter results. In economic news, the labor market remained strong despite a slight increase in weekly jobless claims, which rose by 6,000 to 223,000. However, extreme winter weather and fires in Los Angeles may lead to higher claims in the coming weeks. Well, is what it is. I mean, I hope everyone's enjoying the freezing cold weather down in Texas and along the Gulf Coast because it is chilly. I mean, granted, it's going to warm back up, and winters in Houston are not exact. I mean, I actually like the winters up here in Colorado a lot better because I mean, yes, it's colder, but it's sunnier, and the sun makes everything a lot more pleasant because along the Gulf, in Houston, and when I lived 10 years in Jacksonville. That's where the Navy took me. It was like the same weather. I mean, it was the wintertime. It was gray, overcast, and, chilly. Not cold. I mean, you weren't getting down into the like single digits or teens every night, but I mean, it gets cold. And, when you got to wash an airplane in Jacksonville, Florida at 2 a.m. and it's, 38 degrees outside, and it's 90% humidity, that's pretty miserable. I did it a few times in, I guess that was 1994. So, not the most fun thing to do. The first winter, second winter. That's first full winter in Jackson. Well, no, it was second actually. Yeah, doesn't matter. All right, well, let's jump into some data. This is from investing.com. Initial jobless claims rise slightly, exceeding forecasts. Initial jobless claims in the U.S. rose slightly to 223,000 last week, surpassing analysts' expectations of 221 and marking an increase from the previous week's figure of 217. The 6,000 rise suggests a marginally weaker labor market and could indicate early signs of economic slowdown. While the increase is relatively small, it may raise concerns among economists and policymakers who are closely monitoring labor market trends for potential signs of broader economic weakness. The initial jobless claims report is released weekly and serves as an earliest indicator of labor market conditions. A higher than expected reading can negatively impact sentiment, blah, blah, blah. Let's see here. Despite a slight increase, it's essential to consider the broader labor market context, including employment rates, wage growth, and job creation figures to assess overall health. As jobless claims represent only a portion of the... my tool that I use to create summaries sometimes is a little too flowery in their comments. So jobs, like I said before, the jobs numbers, I wouldn't put, they're important and it's something to really pay attention to, but I would watch consumer spending at the same time. And as consumer spending tips over, then that would lead me to believe that then the jobs will start, or unemployment will start to accelerate. But until that time, I think things are going to stay fairly stable. All right, more data here. U.S. crude inventories decline less than forecasted, signaling weaker demand. All right, the latest Energy Information Administration report showed smaller than expected decrease in U.S. crude inventories, indicating weaker demand for oil. Crude stockpiles declined by 1.017 million barrels, falling short of the anticipated 2.1 million barrel drop. This suggested that demand is not as robust as analysts had projected. Compared to the previous week's drawdown of 1.962 million barrels, the latest figures highlight a slowing momentum in crude consumption. The slowdown could put downward pressure on oil prices, which no one's going to complain about unless you're invested in oil companies, impacting inflation and broader economic conditions. Typically, a larger than expected draw in inventory signals stronger demand and supports higher prices, while a smaller draw does the opposite. Let's see here. If the trend of smaller inventories drawdowns continues, it may point to a sustained decline in demand, which could have long-term consequences for the oil industry. Market participants will closely monitor upcoming reports to gauge whether this trend persists and how it might fluctuate future crude prices and inflation dynamics. All right, one more. Got 4 articles for you today, guys. From Zero Hedge, Trump 2.0. So far, so good for the markets, written by Peter Cheer of Academy Securities. So let's see what he had to say. The early days of Trump's second term have shown a more prepared administration, fully staffed with individuals aligned with his agenda, while potential personality clashes loom, such as a recent split between Ramaswamy and Musk. Markets remain optimistic as Trump navigates his agenda. His remarks at Davos, particularly his call for immediate interest rate cuts, have not significantly moved markets, reflecting the Fed's independence. However, his comments on oil prices have pressured crude markets. On trade, Trump has yet to implement tariffs, but continues using them as leverage in negotiations with countries like China. Let's see here. His approach suggests a strategic delay to secure favorable deals. Immigration policy appears pragmatic, focusing on border enforcement and elevating drug cartels to terrorist status, which could strengthen U.S.-Mexico cooperation. Well, if I could pause here. For anyone who's ever seen Narcos, it pretty much outlines that the CIA and the major cartels work, hand in hand together to smuggle the drugs into the United States. I mean, they don't come out and say it outright, but I mean, the guy with the beard who, I think he knocks off a couple of Pablo Escobar's, or he helps out Pablo and letting him know what's going on. I'm 100%. I do not believe that the DEA, does anything more than just facilitate the drug import into the United States, all while pretending that they're actually, they have a couple of big busts here and there. And then you got the local police and, trying to fight to get the drugs off the street. So it's like one brings in the business, the other has the business or has another entity to try and stop it. So it just creates work for itself. Anyone who's ever been in the military knows exactly what I'm talking about, because they'll just have you dig holes and then fill up other holes of sand and just move the sand back and forth. So it's kind of the same thing in the aviation world, where you just move planes all around the flight line and move them in and out of the hangar. And they just want to create busy work to make it look like you're doing something. All right, back into it. Trump's push for AI and compute infrastructure, with major investments announced, is gaining momentum, fueling optimism in the tech sector. Meanwhile, crypto policy is evolving rapidly, with the SEC establishing a crypto commission and Trump's inner circle showing a strong support for digital assets. Defense and energy policies emphasize peace through strength and drill baby drill approaches, signaling lower inflation through energy cost reduction. Despite concerns over the federal deficit, the bond market has remained relatively stable. The commercial real estate sector stands to benefit from a shift back to office-based work. Investors are watching infrastructure, commodity producers, and defense-related stocks closely. Overall, markets are responding positively to Trump's early moves, but volatility is expected as the administration's policies unfold in the coming months. All right. Well, that's everything that I had to cover for today. So if anyone needs anything from me, please go to DSAFinancialGroup.com. All your financial planning needs can be addressed there. So give me a buzz. I'd be happy to help. All right. Well, hope everyone has a wonderful evening. Tomorrow's Friday, remember, and hope everyone has a great night. And I'll talk to everyone again next time. Adios.